Welcome back to Metals, Money, and Markets. We're at April 20th, 2018. With me, as always, Mickey Fulp, the Mercenary Geologist. We'll break it down. And for MiningClips, I'm Rob Goodman. Okay, Mickey, last Friday we sat here and we thought cooler heads prevail. The next thing you know, we bombed Syria. Some other big news. Dollar up a little this week. Metals mixed. Break it down.
Well, there's no doubt the neocons are in control of the Trump admin now, I suppose. But news of the day would be that the Dems are suing the Russians, the Trump campaign, and WikiLeaks over the 2016 election. Just goes to show, once again, too many damn lawyers in this country. That didn't really have an effect on metals or markets much today. Gold closed down for the week, $9 at 13.36. It spent most of the week at better than 13.45. Went down today as DXY continued to strengthen, and there was probably a little bit of profit taking too. Meanwhile, silver had a big surge along with gold on Wednesday. Gold up $10, silver surged 50 cents, so that bump got the silver bugs panties all wet, but silver came off again today. Closed at 17.10 for a 3% gain. Meanwhile, platinum lost $4 to close at 9.26. We should look at our ratios. Gold to silver down below 80 for the first time in 6 weeks at 78. Meanwhile, palladium had a big pop this week, up 4% to 10.22. That was on the back of strong U.S. auto sales for March, and the platinum palladium ratio is back down to 0.91.
And finishing up with copper, pretty solid week here for copper as well.
Very nice week for copper, up 7 cents, closed at 3.15, up more than 2%. I think a lot of this had to do with the markets realized that a trade war was not in sight, so that was good for all the industrial metals. Also, we had strong Chinese GDP. It's a little weird market right now, though. It's still in backwardation 2 months out, and then moderate contango all the way out to 6 months. So I think the market's not convinced that we're going to have a really strong copper price going forward. Meanwhile, on the other hand, BDI, the Baltic Dry Index, up a whopping 25% over the last 2 weeks, closed at 1,200.
And moving on to energy here, oil, another solid week here.
Very robust week for oil. It actually touched $70 for WTI at one point. That's the first time, I think, since November of 2014. It didn't stick there. It was obviously overbought, went up too high, too fast, and it actually was down today for a while, actually down all day, recovered a bit at close on a Trump tweet bashing OPEC and saying there's too much oil in the world and the price is too high. Needless to say, that wasn't good for the specs in the oil market. It closed the week at 68.26, still a 1.5% gain. U.S. inventories down 1 million barrels. Production up a bit, but still above 10.5 million barrels a day. Rigs continue to climb, +5. And some really good news for the petroleum industry as a whole. The first 3 tankers went through the Panama Canal this week carrying LNG. The first time this has ever happened, and that bodes very well for Gulf Coast LNG plants and producers with now a more ready market to Eastern Asia.
And then over to these currency markets here. Dollar made it into positive ground, but the loonie was the big loser this week.
Dollar was up all week, started the week at 89.4, closed the week at 90.3, up every day for a 0.6% gain, but it's still within this range-bound high and low we've seen for quite some time between 89.5 and 90.5. Euro, of course, was down a bit, and the big loser was the loonie, down 1.2%. to 0.7840. It basically gave back all of its gains last week. And I can't help but think this has all to do with the problems in the Canadian oil patch. Down another 9 rigs. There's 93 rigs only drilling in Canada as we speak. Oil patch, Alberta, Saskatchewan are threatening to cut off oil supplies to British Columbia. And meanwhile, because of this and lack of transport capability, i.e. pipelines, Western Canada Select is trading at an even higher discount to WTI.
And finishing up with these equities markets here, a little red today, but overall a pretty decent week.
Yeah, a bit of a mixed week, up 3 days, then down the last couple of days, but still looking pretty good. Dow closed at 24,663, up over 1%. S&P 500 and Nasdaq both up 0.5%. S&P 500 to 2670, Nasdaq to 7146. Some news came out financial markets today. 10-year Treasury bill interest rates hit a 4-year high at 2.96%. Lots of speculation. A month or so ago, we were headed above 3%, and with Fed raises, interest rate raises imminent. They're saying 3 more this year. Very bullish for bond yields, not so bullish for bond prices, of course. And finally, big news out of the financial markets today. Wells Fargo got hit with $1 billion fine, the biggest fine of the Trump administration, which is now, 15 months old. Get this, Rob. Since 2000, Wells Fargo, the second largest bank in the U.S., has been fined a whopping $12 billion for manipulating markets, for selling their customers services that they don't know about. And to this day, to my knowledge, not a single Wells Fargo executive has been charged or gone to jail.
And buttoning up with the venture here, actually a pretty solid week.
Well, it is looking better. The index is up, really led by the big Toronto gold miners, trickle-down effect. We closed at 805 for over 1% gain 9 points on a week. But there still isn't a lot of interest. Volume's downticked considerably this week. I think the volume today was half what it was last Friday. But we can't complain with the index finally back above 800.
Okay, Mickey. Hopefully we don't bomb anybody this week, and hopefully the Dems don't go off their rockers here. But we'll catch up with you next week, and I appreciate the insight. Have a great weekend.
All right. Thanks a lot, Rob.